Hey traders, this is Blake Morrow with Forex Analytix, and you're listening to the week ahead video for March 13th, 2022. Is everybody ready for a time change? I know I'm not really ready. I'm not ready. It's that time of year where we kind of shift gears in the U.S. in our time zone. I have to get up a little bit earlier for the next 7 months about, but it's part of it. And it is this weekend. So just adhere to that. One of the things that I do want to point out for those of you that listen to the free F.A.C.E webinar and actually to the Forex Analytix webinars that we do for all our community is that there's a time, there's this next week or so between the time that we shift gears in our time zone in the United States where everybody else does. So it's kind of a weird week for scheduling. Just follow us on social media. Make sure you're paying attention to when the webinars start if you do attend any of those. Now, I do have some housekeeping things to talk about before this huge week. We do have the FOMC this week. They're not the only central bank that's meeting, so that's something that we should also be pointing out. One of the things I want to point out before we even get started is actually on Friday, I had an interview with Danielle DiMartino Booth on the Trader Summit website. So if you haven't had an opportunity to watch it, I would highly suggest that you watch this interview with myself and Danielle DiMartino Booth. It's really, really eye-opening, especially as commodity prices continue to rally and as the Fed is looking to raise rates this week. So it's just a great interview that she did with us. So it's important to watch that if you haven't had an opportunity to do that as well. Also, while I'm here with the Trader Summit side, I just want to put this in your mind. Next month in April, I think April 8th through 10th, so we're talking less than a month away, we're going to have our annual event or semi-annual event, depending on how you want to look at it, with a lot of keynote speakers. We're just finishing the lineup, something that myself and several other people have been working on behind the scenes. It's going to be a great event with a lot of speakers. A lot of really good speakers are coming. There's a couple that are coming that as soon as we get confirmation, it's going to be pretty exciting stuff. So make sure that you're just staying on the lookout for that. Also, guys, if you haven't tried out Forex Analytix, try it. It's $1 for 10 days. You can jump in and do our premium product. Also, another way to get involved with Forex Analytix is just go through the trader funding program. There's a small assessment fee, but once you pay that, you get access to Forex Analytix for premium included for a certain period of time based on what account size that you're looking to access. So if you've been wanting to trade larger funds, but you didn't want to put your own money at risk, take a look at the trader funding program. There's several different options available to you. So check them all out. This, like I said, this is a great way to get involved with Forex Analytix at the same time. And you're in the community that will give you ideas, trade ideas, analysis, an app, all sorts of things, and a chat room that's probably one of the most active in the trading world. All right, we're going to talk about, and I guess I should just show you really quick what Forex Analytix looks like. This is the, if you haven't seen it before, this is our platform. This is the news flash, just releases when data releases comes out. It comes out right here. You got your news feed, you have analysis, you have charts that are uploaded by the team. You also can go into live charts in the trading view. There's calendars, there's risk management tools, all sorts of things. And then the chat room is right here at the upper right-hand corner of the screen next to your icon. Okay, but we're going to actually go into trading view into the live charts. The reason why I want to do this is because this way I can actually draw on the charts. And you'll notice the first thing I pulled up is the weekly chart of the yen futures. Now, it's important that I pull up this chart because I think a lot of us are actually looking at the US dollar Japanese yen right now and realizing that the US dollar Japanese yen is at a weekly multi-decade trend line. You could actually take that all the way back and you could say, well, since 1990, we're actually like pretty much breaking out, right? Depending on how you want to draw it and how close you want to get to it. I wanted to point this out because you'll notice going back to the 6J, which is the Japanese yen futures, we're not quite there yet. But I want to talk a little bit about the yen for a moment as a currency and as a country. If you listen to the free F.A.C.E webinars, do you guys know how to get there? Do you guys and gals know how to? Okay, if you just go to where it says webinars on ForexAnalytix.com, right here where it says free F.A.C.E webinar, there's also a link in the description down below. If you're watching us on YouTube, that you can register for this free webinar. We're there every day, well, every trading day throughout the week. One of the things that we've been talking about, well, not myself specifically, K-Man, who's one of our traders that traded on a major bank desk in Japan for the last 5 years of his career, of his like 40-year career, trading on, in FX trade desks all around the globe. He does live in the UK, and he's part of the Forex Analytix team. He's been talking this week about the yen and about its relationship to the big move that we've seen in commodities. And if you've taken a look at like some of the commodities indexes, like here's a weekly, Thomson Reuters commodity index, the CRB index. I mean, take a look at this move that we've seen as of late. Now, one of the reasons why the yen is weakening, one of the things that's attributing to this, and a lot of us, we look at the yen and we go, oh, well, yields are rallying. So as yields rally, the yen tends to weaken, the dollar rallies against it. That's true in a sense, but also Japan imports all of its commodities. Japan is a net importer of commodities, as you all could imagine, small island on the middle of the Pacific, or in the ocean rather, and they just don't they have to actually import a lot of their commodities. Well, as commodity prices continue to rally and strengthen, as you can see right here, it's one of the things that's actually attributing to the yen. So, when I think about that, and when I think about those conversations we've been having for the last week or two on the F.A.C.E webinar, I try to, imagine myself, well, what else could really, make the yen, what could really continue the weakness of the yen? And the rally that we've seen in commodities has been staggering, obviously for supply issues. Now, Russia's thrown a whole, just gasoline on the fire, if you will, over the last few weeks. And that's just perpetuated it, the commodity glut that we're seeing. And as that happens, the yen longer term could continue to weaken. And that's one of those things that I think traders are really not paying super close attention to, but it's something that our team's been talking about for the last couple of weeks. And I think it's really important for us to really understand that moving forward, because it's not just the dollar yen. It might be, you start looking at currencies like, let's take a look at the Aussie yen. We had the Aussie yen, which has been held up at the 161% extension, or just shy of it, of the post-COVID lockdown move, right? We're just nudging up against these highs. I mean, if you look at this from just a very simple technical analysis standpoint, and we're basically making a bullish wedge. That's not saying that the Aussie yen is going to break out today or tomorrow or next week, but we are going in that direction. And other commodity currencies like the New Zealand yen, very strong. The Canadian yen, very similar to the Aussie yen, where it's been holding up, and you could argue that we're breaking a triangle consolidation higher. So when you think about the things that could continue to weaken the yen, then you think about the rally in commodities, and then you start looking at the commodity currencies versus the yen. It's showing you that story that's really developing in the markets globally. And it's got Wall Street's attention right now. Everybody's really hot on commodities. Oh, I didn't want to even say that. It's like a bad dad joke when I said that. Anyway, so that's something that we should be paying attention to. Obviously, the next thing that we really need to focus on is this week is we have the Fed, and everybody is now expecting the Fed to raise rates as you would expect. But now the question is, are we going to have a hawkish hike, or what's going to be the verbiage that comes from the Federal Reserve this week? It's going to be really important. But just looking at like just the euro, for example, I think the euro is very well defined right now. We know that it's close to a bearish, major bearish breakdown. We talked about this last week on the week ahead video. Just want to make sure I refresh your memory here. You take this low right? That's back. Let me make sure I move my head here. That's back in 2000 in the euro, right? And you take it all the way across. We are basically testing a major trend line. But if you look at what the euro's done this week, this euro has bounced, and we talked about this last week. There was a good chance that we could do a bearish consolidation in the euro. Well, I would argue that that's exactly what happened this week. That we bounced and we stalled right where we should have stalled, which right now is the 111.20 level. Big rejection following the ECB. Then the euro came back down. The great thing about all of this in the euro is that it's very well defined. Like, I know where the euro becomes uber bearish. That would be below 108. Pretty self-explanatory, right? And I know where the euro starts squeezing above 111.20. It's all right there based on last week's price action. What you decide to do inside of this is completely up to you. I always tell our traders, like, this is your sandbox. Play inside your sandbox. We'll let the market dictate and drive which way we're going to go from here. The one thing I do want to point out is the dollar is strengthening and has been strengthening a lot on risk aversion. And if you look at the stock market, I would say I would argue that the stock market is in a bearish consolidation. I mean, here's the S&P, and I'm talking about the broad markets. Obviously, if you look at the NASDAQ, it's trading much heavier than other indices right now. But if you just look at the S&P, this is a bearish consolidation. It's a triangle. It's a bearish consolidation. You could argue that we're in breakdown territory for all intents and purposes. We're just kind of consolidating down here and just waiting for the next move lower, maybe the next shoe to drop, however you want to look at it. But with the S&P as weak as it is, if it continues to weaken, let's just say following the FOMC, comes out with a pretty hawkish hike, and it looks like that, maybe pricing in 5 or 6 rate hikes in 2022, and, bringing the Fed funds back to 1.5% or something like that might be enough to put the nail in the coffin of the stock market. If the stock market really starts to drop like that, that would signal to me that the dollar index is probably ready to rally above 100, above this channel resistance that we have. I'm looking at the dollar index now, not at the euro. The dollar breaking higher, and next thing you know, we have the euro trading down towards 105 and maybe even closer to parity. So once again, going back to the euro dollar, you know exactly where your breakout and breakdown points are. I love that about the market. Whenever you can find that, that's like great. A lot of times I walk around the market, and I'm looking at different currencies, and I'm like, I don't know how to trade that. Like I don't. I'm looking at price action of the sterling or maybe like the Aussie, and I'm like, I'm not. I just don't see anything that's like popping out. Well, right now that is in the euro. That's a good thing. When I could look at the euro and say, okay, above here it's bullish, below here it's bearish, and let the market show me, which way it's going to go. I have all the arguments to go either way. Well, is there an argument to actually be long the euro? Yeah, let's cease fire in Ukraine. How about that? That would probably provoke a euro recovery. You can decide for yourself how realistic that is. I'm not going to be the guy, the Mr. I don't understand the political agenda of Vladimir Putin right now. That's me. I'm not going to try to make that judgment. But I will say this, that while we have uncertainty, the euro is probably going to continue to trade heavy. And until there's some sort of de-escalation of the Ukrainian situation, which, let's hope there is, if there is, then the euro probably will have a recovery rally at that point. Now, I want to shift gears a little bit and take you back over to, I want to take you over to some of these commodities. We should probably take a look at the Aussie dollar. The Aussie dollar had made an important low several weeks back when we were trading at 70. We are struggling around the 200-day moving average. And really, the good news here about the Aussie is it's kind of, again, I think it's pretty well known at this point, is if we break these highs above 74 cents, let's call it, we're probably going to go a lot higher. We're probably going to be challenging, once again, 75.50 and maybe even higher after that. You take the Kiwi. The Kiwi's made an important rejection at the 200-day moving average. That's important because, again, I know where it turns bullish. I know that the Kiwi, if it breaks above, this level here around, we'll just call it right now, it's 69.25, and it's dropping because the 200-day moving average continues to slope down, right? So as it slopes down, that number is going to get, that's going to be a lower number as we move forward. But that 200-day moving average is going to be really important. And if you're a commodity bull and you're like, I am just super bullish commodities, I think commodities are going to come out of their shoes even from current levels, and you're looking for the commodity currencies to really participate, well, the good news is I think where those levels are, especially if you look at the Aussie, you look at the Kiwi. Now let's turn our attention over to the Canadian. Why are we going to pay attention to the Canadian? Well, we have Canadian CPI data this week. So, last week we had CPI data out of the US. This week we have CPI data out of Canada. You look at the Canadian currency, we are wedging really, really nicely. And we're in the apex of that wedge. And as we are in the apex of the wedge, it's volatile and it's flipping around. It's going all over the place. You would think, well, with crude oil as strong as it is, why in the heck hasn't the Canadian currency really participated? That's not to say it won't. And if crude oil can maintain these prices, above $100 a barrel, $95 a barrel, somewhere in that neighborhood, the risk is building that the Canadian currency will, follow that move soon. And if you have higher inflation data coming out of Canada this week, which is on Wednesday before the FOMC, then at that point in time, we might be back at the 200-day moving average. I played it on the long side as we approach the 200-day moving average. We talked about that on the trade-off show with Pepperstone Securities and Chris Weston. But now, there is a chance that we come back there. So I want to know the reasons why we get back there, if we get back there, and if it's based on strong oil and higher CPI data out of Canada. I might be a little reluctant to try to buy it again at the 200-day moving average or on that approach once again. A couple other things. Let's just really, really quick. Let's just discuss, and by the way, if you can follow along in your calendar and Forex Analytics, if you want, you can just, this takes you to the investing.com site. You can actually, just scroll down and see what all the data is that's coming up. But let's talk about everything else that's happening this week. So we do have the Fed, as you all know. We have New Zealand GDP. We have Australian employment. As I mentioned, we have the Canadian CPI. We have some producer prices out of the U.S. Remember, we just got our look at CPI. Now, how are the producers dealing with inflationary data? We have Empire State Manufacturing, ZEW data out of Germany. I believe that's Tuesday of next week. So that might influence the euro a little bit. And then we have out of the UK, we have the Bank of England rate decision. Now, one thing I should point out with the sterling, it has been really, really weak, surprisingly weak. I actually tried to play it on the long side on Friday because we were reaching for these lows, and the RSI intraday is very divergent. You'll see it here on a 4-hour chart. Let me just pull that up real quick. I tried to play it on the long side down here as we were down around the 130. 50, 70, somewhere around there. But you can see we're hitting a low in price, but relative strength is, you can see it right here, relative strength has been divergent. That means it's moving higher as price is moving lower. That means as we move lower, it's on less strength. Well, I tried to play it on the long side, and by the end of the day, the sterling just stayed weak, and I just got out of it and took a quick loss. But the fact of the matter is the sterling has been kind of weak, but we're approaching the 130 level. It's a big figure number. As you all know, it's a big figure number. You could argue that it is. Let me just do this really quick. I'm going to do it just really fast for you. You could argue that this is channel support around the 130 level, roughly somewhere in this neighborhood. So, as we get to that 130, 127% extension of that last move up, divergent relative strength, you could argue that we're divergent, maybe oversold on a daily basis, that we might get some sort of reaction there early next week. But just remember, the Bank of England is on Thursday, so that's going to be important. And then just to finish off the week, we have Canadian CPI, and guys, it's going to be ladies and germs. How about that? You know, I was going to say guys and gals. I'm like, ladies and gentlemen, ladies and germs. All right. So, just kidding. Guys, come on. I'm just kidding. All right. Anyway, it's going to be a jam-packed week this next week. Huge moves. Volatility is high. So remember, keep your position sizing smaller to compensate for the wider moves in the market. This way your stops aren't as close. You can have a smaller position as the volatility, you know, heightens and the trading ranges expand. You don't have to worry about getting stopped out so easily. If you can trade a smaller position, you can maintain those positions that you're trying to establish in the market. That's the name of the game. Capital preservation, and also smaller position size, widen up the stops a little bit so you can deal with the volatility. All right, guys and gals, my name is Blake Morrow. If you like this video, make sure you give us a thumbs up. If you're watching us on YouTube, subscribe to the channel down below so you don't miss any of our great content. Also, take a look at the Trader Funding Program. That's a great way to get involved in the Forex Analytics community. Stat on the premium service immediately. I'll see you guys on Monday morning on the F.A.C.E webinar. Thanks so much for spending your time with me. See ya. Hey traders, this is Blake Morrow with Forex Analytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.